let me give you an example. I mean, think about your own world today. If somebody wants to buy a house, what do you make them do before really they go shopping? They need to get pre-approved,
Yeah.
right?
Oh, yeah.
So that is something I'm very passionate about, changing the family law community's mindset is that if you're going to make orders and you're going to make negotiations and someone is, let's say, wanting to do an equity buyout or an equalization, the proof is in the pudding. It's just like anything else. You don't walk into court and say, I make $5,000 a month. No, the
Mhm.
courts make you prove it. What do you make, right?
Mhm.
It's the same thing to do a refinance. Imagine if you come to an agreement and now fast forward 5, 6 months, you've paid attorney's fees, court times, etc., just to find out maybe that option's not on the table. So it can be very costly by not wrapping in a professional early on in the process. Another thing that time is definitely not on their side can be things of change in credit scores. I mean, unfortunately, many divorcing cases during the process of the case, 12, 18, 24 months, sometimes much longer,
Mhm.
is their scores can tend to drop for
Mhm.
multiple reasons. They might have, issues in making their, obligations with less income on the table, and they may be paying for their attorney's fees via a credit card. Well, if
Mhm.
they're racking up their charges on credit cards, that can impact their credit score, which could impact their ability to qualify. So, a CDLP, someone well versed in this world, would understand and advise on those concerns as early on to help
Mhm.
them navigate through the problems and not run into these hurdles.
Yeah, and typically what we're seeing in family law court is that it's almost backwards sometimes. Like instead, like of getting them to a loan officer first, they almost stipulate all of the orders first, and then at the end, once they think that they've reached an agreeable agreement between all parties, then at the end they send it back to the divorce lending specialist. But then the divorce lending specialist takes a look at the order and is like, well,
Or handcuffed sometimes.
you have
Yeah.
an you have an order here where uh, this is no longer going to apply in January 1st, or you don't meet the child support, spousal support requirements either,
Right.
or um, the difference between spousal support and child support as well too. So all of that stuff plays a big part. So what Denise and I are trying to do is we're trying to educate the community to be able to help people that want to stay in their homes during a divorce process be able to without going through this long process and in the end figuring out that it's not possible. It's getting them to a loan officer first, having them be able to determine whether or not it's possible. If it's not possible, giving them some options as to if they did this and this and this, it would be possible, and then they can decide. And I feel like that by doing that, it also helps families move through the process faster, which in the end saves them a lot of fees and a lot of
Absolutely.
time of going through this process.
Well, one of the things that I will tell you is common practice in family law is they deal with the home last, unfortunately. And the problem with that is typically the home is what? It's the largest asset of the case, usually. And the home impacts a lot of the other negotiations or decisions that can transpire in a case, such as maybe even visitation. Where are the kids going to go to school? Percentage of time, which can impact child support, can impact a lot of things. So, this is really a process of teaching the community that putting the house off till last can really hurt the clients. The other thing that we look at when we're brought in early on enough to where we can look at the whole pie, kind of as a all the different avenues, ways that we can look at equalizing. We might have a case where there is um, money for retirement that is up for a potential equalization. And let's say somebody doesn't want to pull so much money out of the house because it would make the payment so high they don't qualify. If retirement has already been settled and it's off the table, we don't have that opportunity any longer to maybe explore that option so it will fit at the end of the day what the family needs. So getting involved as early on as possible to look at everything is really crucial.
Yeah, and from a non-divorce standpoint, as a real estate agent, what I like when clients meet with loan officers first is that a loan officer will provide them with certain options and be able to guide them. No, this is not going to work out, but if you do it this way and this way and this way,
Correct.
then it may work out. And that's the problem right now, that sometimes we're dealing with the house at the end, which takes certain options off the table, where it makes it to somebody that may have been able to keep the property and stay there with their kids. Now, because they waited until the end, they may not be able to, just because of different things are off the table.
They're off the table.